Part of it would suggest that foreign central banks are becoming semi-speculative, that they have looked at history and seen that silver has outperformed gold. Perhaps rather than just defending their economies with gold, they're going to try to make a profit. Over the last 4 decades, that market share has been 2%. So if demand for gold and silver merely reverts to the 4-decade mean, which is what I think it will do, that implies a 4-fold increase in demand. And that would do a very, very interesting thing to price.
The speaker, Rick Rule, suggests that foreign central banks may be shifting towards a more speculative approach, noting that silver historically outperforms gold after a gold trend is established. If central banks believe gold has established such a trend, they may aim to profit by increasing their holdings. Over the past 4 decades, the market share for gold and silver has been around 2%. Still, if demand returns to the historical mean, it could result in a 4-fold increase in demand, significantly impacting prices. There is speculation that central banks in India and China might buy silver, but the speaker is skeptical, as silver could compete with official currencies. Silver markets are highly volatile, offering potential gains for speculators who can handle significant risk. Small investments in quality silver stocks, especially junior ones, are recommended for those who can tolerate high volatility and potential losses. The speaker, Rick Rule, discusses the value of Tier 1 deposits, which are large, long-lasting deposits capable of generating over $1 billion in annual revenue and providing high returns on capital. These deposits are company makers, often leading to takeovers if discovered by smaller companies. Investing in large companies with multi-decade Tier 1 deposits offers stability and strong returns over time, as large deposits yield positive surprises. If you enjoy the video, please give it a thumbs up and subscribe to stay updated on our latest content. Currently, only 20% of our viewers are subscribed. Help us reach our goal of 1,000 subscribers by hitting that subscribe button.
Silver has outperformed gold after gold has established a trend. And if they think gold has established a trend, perhaps rather than just defending their economies with gold, they're going to try to make a profit. Historically, the concept of central banks making a profit is a concept that has never occurred before. So I'll leave the efficacy of those strategies to other people. The other theory that I heard is that India in particular, but perhaps India and China too, as a consequence of historic cultural attractiveness to silver, are going to encourage retail savings in their own countries in silver. Part of me has a trouble believing that, because I think that in India, for sure, silver would crowd out the rupee. In other words, people would go for real money as opposed to government money. Too sweet. And I think that the government might be smart enough to understand that. China might be trying to do the right thing. I don't know. But what you suggest, which is to say that we are seeing increasing central bank purchases of silver, is a phenomenon that I've never seen before. And I can only speculate as to its cause. I also, if your listeners will replay earlier interviews that you and I did, suggested that the leadership in precious metals markets needs to be established before gold follows suit. If you start seeing momentum in silver, however, silver bull markets are very, very, very emotional. I'm not saying that Russian central bank buying, Chinese central bank buying, Indian central bank buying will give silver the momentum that it needs to break out. But what I am saying is that when silver does break out, it's truly an amazing financial circumstance for those speculators who can afford it, and those speculators who have the emotional stability to handle the volatility that you're going to see in the silver market. An allocation to the higher quality silver stocks and silver juniors, a small allocation, to be sure. An allocation that you can afford to lose 30% of if you're wrong, and an allocation that you can stomach 15% volatility and for no reason other than it's Monday or Tuesday is something to consider. And so silver was all about silver, uranium all about uranium. Tier 1 deposits are those very large, multi-decade deposits that make companies. My definition of a Tier 1 deposit is a deposit with at least $10 billion in recoverable reserves and resources that could or will generate over $1 billion a year in revenue, that will be in the bottom cost quartile in its commodity, and will be in the best quartile, but at least 25% in return on capital employed. These are company makers. If you are lucky enough to discover one in a small company, there's almost a virtual guarantee that the company will be taken over. If you are fortunate enough to be able to invest in large companies that have Tier 1 multi-decade deposits, what you see is that the stability and the quantum of the return on capital employed over time increases. It is a truism that large deposits always yield surprises, and those surprises are almost always good. It is also a truism that if your deposit can last 2 or 3 decades, that deposit will give you 1 or more bull markets in the course of its life.
Rick Rule notes 2 interesting trends: a growing interest in gold from young Germans, disillusioned by their government, and a surprising rise in gold purchases by young women, supported by anecdotal evidence from Costco's bullion sales. While the US dollar remains strong, gold has performed exceptionally well in other currencies over the past 5 years. This may explain why more non-US investors are turning to precious metals, as gold has already proven its value in many countries, whereas its potential is still being debated in the US. The speaker, Rick Rule, emphasizes that large and small deposits carry risks, but only large deposits can yield significant returns, making focusing on Tier 1 assets crucial. They offer a $99 Rule symposium with a money-back guarantee, stating that the content is deep and dense, designed for those serious about investing in extractive industries. Attendees will have access to recordings for a year, as the information is intense and requires multiple reviews to be fully absorbed. Now, let's shift our attention to the video.
A couple of interesting trends. One stands to reason, a lot of German interest, because the German government has been even dumber than the American government. And there's a whole generation of young Germans who understand that they were fed a bunch of horsepucky by Merkel and her ilk, and have, I think, come to the rightful conclusion that they need to own precious metals. The other thing that's interesting, Donegan, which I've never seen in a market before, is that about a third of my increase, a little less, 30% of my increase, are now coming from young women. It used to be that the gold audience looked like me, old, fat, bald, white, rich, and there is an increasing interest among young women in gold, which, by the way, anecdotally was supported by Costco, which, as you know, is now, at least nominally, in the bullion business, and they have reported that a surprising number of the buyers of gold have been younger, and a surprising number have been female. So I think that's some anecdotal evidence, not statistical evidence, but rather anecdotal evidence, which would suggest that the market for gold and the awareness of precious metals among retail investors generally is swinging up. It's important to note, too, that as dangerous as U.S. dollar participation is, that old Casey joke about the U.S. dollar being the worst currency in the world except all of the others applies. When we talk about gold breaking out into nominal highs against the U.S. dollar, in other currencies, gold has performed spectacularly well over the last 5 years. And so I think if you're a saver in almost any currency in the world, other than the U.S. dollar, gold has already established momentum. It's already established trajectory. And if I had to guess why an American database like Rule Investment Media is becoming increasingly non-U.S., I suggest that the price action in precious metals in those securities has already demonstrated thesis. While in the United States, the thesis is still being questioned. People need to understand that big deposits and small deposits both have big risks, but small deposits can never make big money. And the focus on Tier 1 is simultaneously reducing risk and increasing reward. Like all of my investment education products, anybody who signs up for the Rule Symposium who doesn't believe that they got their $99 worth just has to email me and I give them the $99 back. Full gold-plated money-back guarantee. I'm delighted to say in 28 years of money-back guarantees, I've had to refund less than 1/10 of 1% of the tuitions charged. That notwithstanding, the risk is all mine. The only qualification I can give is that this is going to be very deep. If you're a tourist, if you're not interested in extractive industry, investment, and finance, please don't come. This is not going to be like reading the funnies. We're going to work you very, very, very hard. We're going to give you access to the recordings for a year, and you're going to have to play the recordings 2 or 3 times because we're going to give you more information than you can absorb in the time allocated. If you do care about extractive industries, not just gold, if you do care about extractive industries, I think this is an absolutely invaluable course.
The speaker provides valuable insights into the dynamics of precious metals, central bank strategies, and the importance of Tier 1 deposits in investment portfolios. With increasing interest in gold and silver across different demographics and regions, the potential for growth in these markets is notable, especially for those willing to navigate the risks. The Rule Symposium offers a deep dive into extractive industries for serious investors looking to enhance their knowledge and capitalize on these opportunities. How might central bank purchases of silver impact the broader precious metals market in the coming years? What key factors make Tier 1 deposits more stable and profitable for long-term investments? Let us know in the comments section below. Also, ensure you like this video, subscribe to the channel first, watch the video, and turn on post notifications for more videos like this. Until next time.